Wonder if we have a down day tomorrow, if there's going to be a lot of YouTube videos coming out about a stock market crash. I have a feeling there might be if there's a down day. You're watching the Daily Stock Market Brief. My name is Michael Silva. We use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. We have a lot of stuff coming out tomorrow. We have the CPI data, and we also have the ECB talking. And next week, we have the Fed meeting as well. So these next week or 2 weeks are important weeks for the markets. We're pressing right around an all-time high. But you can see today in the markets, it's struggled to really get some breakthrough momentum. So we're going to talk about some charts here in today's episode, and then we're going to kind of wrap it all up in the conclusion section as well as to what I expect to take place. Let's hop into today's show. All right, everybody, welcome back. We're going to just hop right into it. Daily chart of the S&P 500. You can see here it's just been for the last 4 days struggling to get above this kind of just chop zone right here, all right? Overall, though, still above the 5-day moving average, and all the other moving averages are still bullish. Now, I want you to pay close attention to these daily timeframes of one thing that I do notice, and that is a lack of momentum. First off, RSI has been just pointing to the downside, and you can see here this last high, the RSI reading was higher than it is right here. So we have a subtle divergence there. As well as the price percent oscillator, you can see momentum has been dying as the market has been trying to push higher. And it's been a pretty aggressive move, right? From 4,050 right here. And it got up here pretty quickly to 4,200. I will say that the price percent oscillator looks like it's about to do a bearish crossover right here. But we will see. Tomorrow's data is important. The market did react on like this on the last report on this day right here. You saw it was a decent sized gap down and then a big red candle to the 50-day moving average. But I want you to pay close attention to the price percent oscillator here on the other charts as well. First off, the IWM, it's taking a little bit of a breather right here, right? We had a bullish breakout. It's trying to test these all-time highs right here. It came from a low of right around 215, and it's been pretty much vertical from that level. So yeah, it's going to have to take a little rest. It would be nice to see it consolidate more and then break out to an all-time high. If it's this vertical of a move and it continues to press higher, I would expect to wait for a back test to see if it holds as a level of support. Let's look at the Dow Jones Industrials. Now, this is where I want you to pay attention to the price percent oscillator. This one also looks like it's crossing over to be bearish. The price action did get below the 5-day moving average, but it's still overall in bullish context. So, yeah, maybe the market wants to take a little rest here. That's totally fine. I mean, it is overextended in many aspects, so it makes sense to see some sort of larger correction, 5, 10%. I mean, markets do that. Every year go around 5 to 10% drops, and we just haven't seen anything, remotely happen here since pretty much the 2020, right? We just this little drop, recovered, and then it hasn't done anything really since this point right here, which was in March 22nd. Let's look at the Qs really quick. Qs are still holding up. But, though it's been a pretty dramatic move from this big gap down and then it's ramped up higher, still looks like it wants to potentially go, touch this upper trend line here. It's going to be interesting to see because we have to pay attention to the yields and what they're doing as well. And one thing I want to note here is just look at the lack of volume coming in on today, which is quite interesting. We haven't seen this low volume since pretty much, mid-February right here around these levels right here. Whoop, whoop, bah, eep. What's going on? Okay, there we go. That was awesome. So we're going to continue to watch to see how this develops. If we start cracking through the highs of these previous 2 days, then I think we can continue to get up and press this trend line. Now it's really just consolidating right by this previous area of support, because once support is broken, it can become a level of resistance. So we're just trying to hold within this little range right here as the market, decides what it wants to do. Northman Trader posted this. I use this chart often too as well. This is just goes to show you that no one's really worried about risk. You can see here the price, the put to call ratio. This is on the monthly time frame and the month isn't over, so this can change. But just look how low this reading is. This is the lowest reading that we have access to on stock charts. You can see here dating back to 2003. This is a very, very severe low. What does that mean? That means this is a big risk factor, okay? So things can change very quickly. So nobody there's no fear in the market as we're pressing all-time highs. Everything is extremely bullish. And that from the, if you look at a contrarian standpoint, that is a risky situation, because as soon as something happens, you have all this bullish behavior flip over to bearish very, very quickly, and you see a lot of panic selling, and that's where you get those aggressive moves to the downside. Let's look at the divergences. Divergence continues to build on this ratio right here. You can see the SPX ratio, SPX over TLT, it's heading lower now. We printed at 29.78. Meanwhile, the S&P 500 is still just right up there at its all-time highs pretty much. So this divergence, what's happened plenty of other times previously, it was important to pay attention to. And typically what happens when these divergences continue to build, if they're not resolved, the market heads lower. The TNX, it actually did come perfectly down to this target area. Let's see if it wants to head lower here, but it did land right on the 100-day moving average, which we were talking about the other day. Meanwhile, the TLH did break out of this bottoming pattern, which could potentially put a little bit of a pause to growth stocks, and it did get above its 100-day moving average right here. So we'll continue to watch and see what develops from this. Perhaps it's going to be breaking out right now. We do have a little bit of resistance just overhead at around 146, but the higher this goes, that means yields are going to continue to head lower. Let's look at the dollar. The dollar, nice hammer candle on this pullback. That suggests that we can potentially rip higher. What does that mean? Well, the market will probably head lower. You can see this inverse correlation. When the dollar was up here and it started breaking down, look what the S&P 500 did. Started ripping up higher, okay? And now we're starting to break out of this falling wedge right here, which is bullish. And as you can see, we had a big green day, pulled down. It hasn't fully decided if this is actually going to continue to press higher. It's still bullish on the year, the dollar is. It's still up. This gray dashed line is where the yearly open was. And you can see here we are positive on the year for the dollar as of right now. When we look at breadth, divergence still holding as of now on the NYMO. What does this mean? Well, it means that as the S&P 500 presses higher, but yet breadth is kind of just not there to support it, it's something to pay attention to. Sometimes divergences like this, it's not necessarily a leading indicator, but it can lead us to believe that the S&P 500 is getting overextended. And here is the same indicator, but it's a traditional calculation. And you can see here when it gets to around these readings, it's overextended, and it has a divergence there as well. The VIX is forming a little triangle pattern right here. It did have it was up 4.8%. I wanted to call out here on the daily time frame, we do have this little cupping pattern on the RSI, as it looks like it wants to try to break out of this, and it could be a quick hit to the upside, but that doesn't necessarily mean anything. So we'll have to zoom in a little bit closer. 30-minute time frame. In the 30-minute time frame, we have 3 open gaps above us. Those would be areas to pay close attention to. RSI is getting to the area where it could be overbought. So what does this mean? Okay, so say if the CPI data comes out, the market's going to respond the way it wants to respond. Perhaps it's a huge reading, and then the market really doesn't like that, and it potentially puts the Fed in a hard place where they may have to, raise or talking about tapering sooner, potentially, and talk about that when they announce it, potentially after their OFMC meeting. So that's a possibility. However, if it comes in at the forecast, perhaps that gives us a relief rally. It's so hard to determine what's going to happen. So we just need to be prepared for both a bearish perspective and a bullish perspective. The bearish perspective, what could happen is we might just get a sudden spike up. That would be, obviously bearish for the S&P 500, but we can look at levels that can get overextended. And we have 20 and we have 22 right here, some open gaps, and then this one above us. So when we get to those levels and the RSI reading is very overbought, that might signal a short-term bottom in the S&P 500 and various stocks. Another thing that I've been pointing out, and I want to continue to point out, is this divergence that's building. The S&P 500 is right around its all-time highs. And the weakness, the internals right here, are continuing to drop, right? So you can see where we're at now, 65.06. So 65% of the stocks in the S&P 500 are above the 50-day moving average. This has been going down. So that means that the amount of stocks above the 50-day moving average, they've been going down. Meanwhile, the S&P 500 is holding up at its all-time highs. And you're starting to see that in the price action, right? It's been just going sideways. And it's going sideways. It's holding up by some names, right? but then you have the internals continuing to weaken. Meanwhile, the percent of stocks above the 200-day moving average still is in the 90s, which is very high. Let's look at the 10-year yield. The 10-year yield, David Keller actually pointed this out, so I brought back up my yield chart, and this is important to note. He said that the 10-year -2s, which is the yield curve here, it did crack below this area of support, and when that happens, it's not always great for financials by any means. So financials could be taking a little bit of a break here. We got to see how that develops because it can easily turn back up. Honestly, the 10-year yield is the one in blue, and this could still be flagging for all we know, right? The 10-year yield pulled into the 100-day moving average, the TNX, okay? Let me pull that back up. Where's that at? Where are we at? TNX, here we are. Nope, yep, nope, yep, nope, yep. Where is it? Oh my goodness. Okay, there it is. As you can see, it pulled in right here to the 100-day moving average, so it's possible that we start getting a bounce, which would technically fix, most likely, this chart. Potentially. It's not a guarantee because this is the spread, but we will see how that develops. All right. So what does that mean if this starts to head lower? What happens if the 10-year yield or the 30-year continue to head lower? Well, that's not good for financials. And you can see here the BKX is extremely overextended. It has been going from 55 to 135 in a year and a half. So it's completely vertical. All right. Absolutely crazy. And you can see this monthly candle, the month is not over, but it gapped up and now it's, some dark cloud coverage. It's not the greatest looking pattern, but it's, we still have a lot of time left in the month, so we don't know what's going to happen. One other thing, it's up by the upper range of the Bollinger Band, and it's completely disconnected from this 5-month moving average, which is 123.47. So if we do start to see continued movement to the downside, I'll tell you this, hope you're listening right now, if we start getting the BKX down to this monthly 123.47 5 EMA, I have a strong feeling that we'll probably see some sort of bounce, and then you could look at various financial stocks if that's the case, and we'll probably see some pretty big moves. Speculation, but it's just kind of my thought. Meanwhile, the BKX on the 15-minute time frame, let's zoom in here. It's below the 5-day moving average, gap down. We thought that this bull might be a bull flag, but we're like, but it's on a declining 5-day moving average. We'll see what happens. Well, the market wanted to gap it down and head lower, putting in a lower low right here. So that is not the greatest sign at this particular point in time. Once the RSI gets pretty oversold, we do see some bounces. As you can see, this low to a higher low, and then we saw that bounce from that divergence take place, but it's not, if this puts in a lower low again, okay, if this price action puts in a lower low, but the RSI reading is still up here and then starts to curl up, that'd be a pretty big positive divergence right there, and we might see another bounce perhaps. Let's hop into some 15-minute charts because this helps us zoom in to the price action to really get a gauge as to, levels to watch going into tomorrow. First off, the SPY. We're still above the 5-day moving average. Okay, so you can see it held up for most of the part of the day, but then at the end of the day, it started selling off. Various stocks were starting to struggle. Okay, just pay attention to this RSI. When it gets pretty overextended to the downside, we can typically see it move up. The overnight market, as of right now, the futures markets, they are doing just fine. We'll see how that takes place throughout the night and where it wants to open up in the morning. But as it stands right now, we have an inclining 5-day moving average, and it's still in bullish context. So it's going to take a lot to become bearish with these charts. This chart, so I don't know if I showed this kind of bearish pattern right here on yesterday's video or if I just showed it on my Discord group, but I called out this little bearish pennant as the 5-day moving average was flat to potentially heading down, and it did crack down through that and reach down to this previous low. The RSI is getting pretty oversold, so that means we might most likely see a bounce, but the 5-day moving average will probably continue to decline where that can act as an overhead resistance. So be aware looking at that. If you want the 5-day moving average and a 15-minute chart, use a simple moving average at 130. It's pretty much the same thing there. So that's what I do, and something that I learned from Brian Shannon. Here's the transports. Remember way back here when we were calling out this bear flag? It dropped a lot. But you know why we we're more confident about this up here? Well, simply because when we look at the quarterly charts, the whole entire candle, the quarterly candles outside of the upper Bollinger Band, so it was just overextended. That's what happens on these big overextensions. We still have a declining 5-day moving average. The price is continually to get beat down here, kind of forming another flag similar to what we saw right here. So we'll continue to just develop this. Notice how the price action came up this area, but it held as resistance right on that declining 5-day moving average. So this doesn't look good. It's going to take a while to repair this. So it's something to just it's something to monitor. Okay. Sheesh. Here's the IWM. It did break down from this rising wedge. What do you know? Price action is got a little bit oversold here, and we saw a little bit of a bounce at the end, but mainly it was just down today. Yeah. So overall, though, let's pay attention to this. We still have all this volume shelf profile right here, okay, and all this price action. You can see that's probably a support zone, right? I got to delete this this gap right here. I forgot to delete that and actually move it because there's a gap right here. Okay, so there's some support right in this area, and we're seeing a nicely inclining 5-day moving average right here. So perhaps we come back and test this 230 range, and then we head a little bit higher. Who knows what the CPI data is going to bring? Maybe it'll bring in a big scare, get us some very big oversold readings, and then all of a sudden we're going to have a relief rally, very similar to what we saw the last report. Here's the Qs. We drew out this rising wedge. We gapped way above it. We glided back down to fill the gap. We came right back in it, and then we fell back down. Overall, though, what's some levels to look at? The 5-day moving average, this big volume shelf profile. The 5-day is inclining, relatively flat, but it's starting to incline a little bit more here. So yeah, 334, 335, that zone right in here should offer up some good support if we pull down into those areas. So overall, guess what? Things are still bullish despite, some what's the good word to use? I guess just uncertainty going into tomorrow's report. The market's at just about all-time highs. It's probably discouraging to traders because we're sitting at these highs and we can't break through. There's a lot of divergences building, suggesting that, hey, let's take a little bit of a breather, let's pull back, and then let's continue this rally. That's my guess. That's what I would expect to take place here. Let's look at crypto really quick. Bitcoin, what do you know? This hammer candle ended up being a very aggressive bounce. It's even up more right now. I think it's around up 13% for the day. Keep in mind this upper trend line right here, that can act as the level of resistance. I'm not surprised on this big move to the downside that we're seeing this big move right here. So we'll continue to monitor and see how this develops. However, what I do find interesting, oh, you know what, actually? I wasn't going to show this, but I might as well. This low right here, actually on May 29th, it was actually just before that, but the Sailor to Shift rotation tool, I was replying to a trader and basically was saying if it gets, at a certain level, I think it's at 29, 30, something like that. And I was just saying that I agree because the Sailor to Shift rotation tool, and I'll bring that up, every time it reaches the rate of change at these levels, we've seen some pretty significant bounces. And I don't know how high the bounce is going to be, but the Sailor to Shift pulled into that area, and now we're starting to see these bounces. If I zoom in on this, you can see here a little bit closer, you can see that it pulled down into it right here. Well, first off, when it crosses through zero, that sells, and then when it hits down, it's a sell signal, and then when it gets down to this minus 40 or lower, you can see a big bounce, bam, right here, big bounce, and now we got here, and now we're seeing a pretty decent sized bounce as of right now. However, it's still technically on this thing, it's not back above zero, so that to me still signals, yeah, it could get there, and it could get there fast, but we're not out of the woods yet, all right? Now, where's the opportunity? This is where I think an opportunity is right out of the gate. Look at how big Bitcoin's moving right now, but look at its little partner here, Ethereum. Ethereum is only up 3% compared to Bitcoin's now 13%. This might even be higher now because, people are going to take note that Ethereum's lagging. And typically what I have seen is when you see a big down day in Bitcoin, you see a bigger down day in Ethereum. And when you see a decent up day in Bitcoin, you see a bigger up day in Ethereum. Right now, that's not matching up. So this to me seems like an opportunity to potentially catch more upside move to around 2,800 to 3,000 in the price of Ethereum if Bitcoin wants to continue to press forward. All right. let's just wrap this up in the conclusion. So we have the CPI data coming out tomorrow at 8:30. Just be aware of that. Markets are gonna, be shaky out of the gate. We'll see how the market wants to handle everything. You should have an idea going into that, okay? Because, like for example, for me, I only have 3 or 4 full-size swing positions on right now, and a full-size swing position is not that big for me. Comparative to my portfolio, right? So what does that mean? Well, I mean, if I had I always use this as an example. If it's a $100,000 account and I usually can trade 10 positions, and then but beyond that I get it's too complicated, but I would only do, $10,000 per swing position. That would be a max position. So I would be in, if it was a $100,000 portfolio, 30,000 of that would be in the markets in various 3 various stocks. So if we have a huge down day, say 10%, I'm only losing 10% of 30,000, not my entire balance. So it reduces the volatility because I have more in cash, but I do have exposure in various stocks. Like for example, I'm in a copper stock, I'm in a steel stock, I'm in a industrial stock, aerospace. So I got a couple things going on, all right? And you can see that kind of stuff if you're on the Discord. I'm getting sidetracked here. So basically, yes, what I'm saying is have a plan, because when the data comes out, you're going to see the market interpret that data. It's going to try to decide what it wants to do. It's going to be volatile at first, and then it's going to settle down a little bit, all right? That's typically what happens. So don't make any rush decisions during the panic or during the euphoria, whatever happens. Have the decisions made prior to it, and then stick to that strategy when the reports come out. All right, and then also other than CPI, which we've been building this up. By the way, I'm only building it up because I have a weird feeling that it's going to get really weird if we get like a 5% plus rating on that. If we do, I think it's going to press. It's going to just it's going to put the Fed in a hard spot. And if they got to start talking about tapering or start actually lifting up interest rates, it's going to be interesting to see. But I can also see a relief rally coming to this to all-time highs. It's all over the place, so you just got to be prepared. ECB also coming out tomorrow. I brought up the DAX monthly time frame. A lot of people that that watch this do like seeing the DAX. The reason why I'm showing the monthly time frame is simply because I like looking at the longer term charts, and this right here is it's screaming higher and higher. And I don't think anything's really going to change with the ECB. I think they're going to continually doing what they have been doing, very similar to what the Fed has been doing, is just printing a lot of money. This is the German DAX. It's been going higher and higher. We're completely disconnected from the 5 EMA, so a reconnect at some point would make sense to me. But just be careful if it starts cracking down. A lot of the times when you crack down through this stuff, it tends to grind higher, and then you see a bigger move to the downside. I don't know if that's going to be the case, but it's something to call out. Not the greatest looking thing, especially in this huge vertical format, which we're seeing across the board in indices and various commodities. That's all I got for you on today's episode. Everybody, see you later.